This is a unique opportunity. I want to share with you something that I am learning and discovering. It by no means is complete. It is, however, something that I feel is worth starting a conversation about and for and with. And this deals with the tax code in the United States of America. So if you're not from the United States of America, maybe you can just witness this and watch this and compare it to your own nation and their own way upon which they deal with taxes. But one of the things that I notice is currently we have 7 tax brackets. You have a $9,000 roughly, and these are going to be estimates, $9,000 below, it's like 10%. Then you got above $9,000 up to $38,000, and that's 12%. And then $38,000 into like $70,000 or $80,000 is 22%. So just from 0 to 80, you have an increase to 22%. And that's just the tax on your income. That's the federal tax on income. That's not Medicare, and that's not Social Security, and that's not your state tax or your local tax or your sales tax or your property tax. That's just your tax on income, okay? And so before you get to $80,000, you have ramped up all the way to, 22%. And so what I thought is, why not create a model that actually depicts real world resistance instead of this artificial bracket that is either made for convenience or some sort of political reasons. So what I did is I've spent maybe 10 hours or so kind of coming up with what you see right here. Now obviously these numbers are pretty small, so you probably couldn't read them, but I came up with 51 tax brackets, and there are actually 47 different tax rates or tax percentages. So in other words, there's about 4 or 5 tax brackets that have the actual same tax rate. And I did that, again, think of this analogy of a bicycle. A person riding a bicycle on a flat plane. As they pedal quicker, they get to go quicker, but they also experience wind resistance typically. And so that makes it harder for them to keep going faster. Now, for each person that lives life in the United States of America, taxes become somewhat of a burden. Now, if you're not really going very fast or not making a lot of money, you're not going to feel much of a tax burden because, the rate is 10% or, even less than 10 or 10% roughly if you're not going that fast. And that's like just pedaling the bicycle very slowly. You feel a little bit of wind, but not much resistance. But as a person becomes more ambitious and they want to achieve something, you feel a comparable wind resistance that increase. For each little mile per hour that you increase, you feel wind resistance that increases. And so that's why I came up with these tax codes. And I want to give you, again, this general idea of it before I get into the nitty-gritty. And so just to complete this general idea is that I think that the artificialness of the tax brackets creates barriers to get into the next tax bracket. I'm at, I guess, close to that $38,000 mark, but if my tax is going to increase 10%, just making it a couple extra $1,000, then there's no incentive for me other than just the joy of working more to make that jump or make that leap. Now, the Republicans, Congress, and President did pass a tax cut that extends your deductions, but modifies or undermines some other deductions. But in the look at it from the surface, it looks like I will be able to make a little bit more money and still stay in the same tax bracket that I've been in for most of my adult life. Except for maybe 1 or 2 years where I was like really impoverished and was trying to live off the land and all that good stuff. And that's a different story. But in that sense, there is an artificialness to the tax rate increase. And what I did is I went basically $10,000 a percent, $10,000 a percent, all the way up to 39%. Now, the highest tax rate currently in America is at 37%, and that's over $500,000 or $600,000 if you're filing jointly. So I go all the way up to 51%. So let me tell you a little bit more about this tax concept, this tax proposal. So if you make less than $30,000, you have no federal tax liability. So less than $30,000, no federal income tax, okay? And that's just because I've been in that place, and that, I got charged, I think, about $4,000 for federal tax in 2017, and I only made $26,000. So that was like my adjusted gross, whatever you want to call it, income. So that $4,000 could have been really helpful for me in all the things I wanted to do. I could have went to the dentist. I could have went to acupuncture. I could have, had a couple more massages, went to the chiropractor. But instead, I don't have that $4,000. And so I just said, well, hell, I'll drink some tea, do some yoga, and hope it all works out right. And so this idea means that if you're already at $30,000 or below, you're basically barely making it by anyway. So there's no reason for us to tax you, because if we tax you, then we might also end up supplying you with welfare or food stamps or Social Security because you got hurt at work because you were so stressed about not making enough money. So below $30,000, no tax liability. $30,000 plus one, so $30,001, you have a 1% federal income tax rate, and that goes all the way up to $40,000. So at $40,000, you would be charged essentially $400, because $40,000, 1% is for $400. And I'm going to pull up this chart so you can see them, because I'm going to go through a few other big ones just so you can kind of see how it moves. But as you continue going, you look at, say, all right, you make just at the median income, like $53,000, but let's be simple and just say $60,000. That means you would be in the tax bracket of the fourth tax bracket, and the third tax bracket right at 60,000, so not a penny more than 60,000. Right at 60,000, you would be doing basically 3% of your income would go to the federal government, basically. And that would mean that you would pay $1,800 in federal income tax. Your take-home pay would be $58,200. All right, so that's pretty decent. You'd still have your 6.5%, I think, or 6.2% for Social Security, and your 1.45% on Medicare, because your employer is supposed to pay the other half. So it's 6.2 and 1.45, I think. So you would still pay those taxes up to the current rate, which is like $125,000. You pay that 6.2%. And after that, you don't pay any more, because that's just the way the law is. And that'll be a different video getting into that. But the point is, your federal tax would only be about $1,800. But now if you jump down to like what we would call the 90th percentile, I believe that is over 120,000, you're only paying 10% tax. And that would be $13,000 if you made basically 130,000. If you make 130,000 or less, 120,001, $120,001 to $130,000, that would be 10% tax. So $13,000. That is the rate currently, the 10%. That's currently the rate for 9%. So everybody all the way up the spectrum, all the way down to $360,000 or $370,000. If you make $370,000 a year, you would be getting a tax cut. The people that would be seeing a tax increase is $370,001 to all the way up through millions of dollars. They would be seeing an increase. Now, it wouldn't be that big of an increase at the 380 or 390 or 400 or all the way up basically to about 450. You're still at about 39%. But once you get to about 500,000, then you're at 40%, and it goes all the way up to 51%. And that's if you make over $1 million a year, 51%. And the philosophy, the metaphysical philosophy there is that you have earned this amount of money. So we want to give you as much as we can. But we also recognize that what you have accomplished could not have been accomplished without the rest of society. In a lot of ways, you don't know how the rest of these people, to mail carriers, to janitors, to bus drivers, policemen, and firefighters, all help society function in a cohesive way in which you can profit immensely from it. So we want to make sure that people understand that your riches, yes, they are part of your choice and your divinity and your power and motivation and achievement. But without society, that would not be possible. So it's the closest balance that I can see between divinity and authority within and the ability to recognize that your environment provides half of everything that comes your way. In other words, it's half about you and half about everybody else on the planet and everything else on the planet that helps you live your life. And the reason I did go to that 51st percentile going away from you is because it stimulates humility and humbleness to recognize that you don't need that much money. I mean, granted, everybody has a different concept of how much money they need and whatnot. But again, it recognizes that you're not that important. I mean, you are the most important person on the planet. However, as well as every other person being the most important person on the planet. So when you put the aggregate together, you end up with basically a half and half. So it's slightly symbolic to say that you should be generous if you're that prosperous. That's kind of the main underlying element of 51% tax rate. If you're that prosperous, be generous. And this is how such a statement can actually happen with this tax philosophy of, these basically 47 different tax rates, is that you have the opportunity, if you pay taxes, to determine where your money goes, what departments. Say you love going to the national parks. You want a quarter of your tax money that you owe the government to go to fund the parks. Or say you're concerned about, North Korea or some Iran or whatever else, Fox News and CNBC and whatnot, or telling you to be afraid of, then you can send that money to, the CIA if you want, or to the military branches, the Navy, the Army, Marines, Coast Guard, whatever. So you would have a chance by your own tax, what you've made, to determine which department it goes to. And this is what one of the things I like about this philosophy is that then the IRS becomes different. It's not there to just catch cheaters anymore. It's there to actually compile a list of all the departments, talk about what each department does, and break down the type of budget it needs in order to perform its service. So if you don't like ICE, you wouldn't send your tax dollars to ICE. But if you do like the Immigration and Customs Enforcement Organization, then you could send your money to that organization, the tax money that you owe. If you think the Department of Transportation needs to really rebuild the roads, then you send your money there. Or, like I said, the national parks or welfare or housing or wherever you want this money to go, you can determine where your tax money goes up to either 1%, so like if you have a tax rate of 10%, like the $120,000, then you could choose 10 different departments to go in, for your tax money. So that $13,000 can go into 10 different locations. And again, what that does is that incentivizes you to be more participatory in the government's functioning as a democracy, and also for you to realize that the money, yes, it's kind of being stolen from you, but because you get to determine where it goes and which programs it goes to fund, it's less stealing from you and more about cooperation and what you think the greatest needs of the country are. So it's two-tiered. It's these 47 different tax brackets, or these different tax rates, 47 different tax rates, so it never gets to the point where you hit a disincentive to keep making more money. Because each one of these tax rates, if you're at the end of each tax rate, you'll still take home more money than the previous tax rate. And that's important. So it doesn't decentivize us from making money. But then on the other main point is that we get to determine where that money goes. Now, there are a few other really important concepts that go hand in hand with this tax rate. One would be the deductions. And, if you sat with me this far, then this is actually interesting to you, because I know for a lot of people this is not interesting. But deductions, you should be able, through this federal tax, to be able to deduct things like your property tax, your state tax. And, I don't think you need this quote unquote tax exemption, or this whatever rate is. It's like the personal exemptions of used to be 6,000, now it's like 12,000 for an individual, and it was I guess 12,000 for an individual or for a couple, and now it's going to be 24,000. You don't need that type of exemption with this new tax rate because it's kind of already underwritten into it. But in addition to it, sure, you have probably like maybe 25% you can write off if you have expenses like interest on mortgages or property tax, or you donate to not-for-profits. Like 25% of those exemptions should be able to get you probably down a tax bracket, hopefully, because they're only $10,000 tax brackets mostly until you get towards the end. So that means that you should be able to minimize your tax burden a little bit better, even in that way still. In addition, this is also the same bracket I would use for the capital gains tax. If you sell some property, if you sell some stocks or some land or cryptocurrencies. So if you make less than $30,000 on the transaction, you don't have to pay any tax on it. If you make $1 million, well, then you're going to pay 40 or 50% on it. If you make $1.5 million, you're going to pay 51% on it. So again, I think this is reasonable because it doesn't take too much from people, but it recognizes that the more you make, the more you have to give. And by empowering people to choose which department it goes to, I think it really helps people move away from the idea that taxation is theft, because that's an idea that I believe in the current model. But if you adjust it to saying you get to determine where this money goes, then I don't necessarily have the same feeling that I'm being taken from in my taxation. The last thing I'll say is that if departments don't get enough money from the taxpayers, well, then that's basically the taxpayers electing to say that these departments don't need funding. Now, Congress and the president can step in and say, no, regardless of what the taxpayers think, we still need to fund this for quote unquote national security reasons or whatever they want to call it. Then they can create, a budget and have money printed. But here's one large exception, is that Congress would print the money, not the Federal Reserve, because Congress doesn't have to charge interest on it the way that the Federal Reserve does, because the Federal Reserve buys these treasury bonds and then says, well, these T-bills are going to, yield this much interest, so then the government owes the bank money. But the government should be the bank in these instances and not have to owe itself any more money. It should just fund the project, whatever it is. But that will also help point out to the politicians what are some of the programs or departments within the government that maybe aren't useful, number one, or two, the public doesn't understand its role of influence on. So it would help in the debates about, well, we should shut this one down or open this one up, because I have a slight libertarian leaning, so that means that I would like to see smaller government. And I think this is also a way that would achieve it, but not in a way that would be too drastic or onerous on the public at large. So with all that in mind, I think you have an idea of what I'm talking about. And in that sense, I look forward to your comments, your criticisms, your questions, because again, this is just something I'm working on, trying to understand how taxation cannot be theft and how taxation can help, but also not hinder as the way it sometimes does in today's age. So thanks for sticking with me this long. I appreciate it, and I look forward to your feedback. All right, bye.